Hi everyone. Today markets were once again choppy. You can see this action that we had here, and honestly this is starting to look quite bad in my opinion. You got a big down move 2 days in a row, grinding bear flag type action, hitting the trend, and now you're starting to see this sell off. Not exactly what you wanted to see, but let's look at all of the time frames and see if we can find anything different. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So I wanted to highlight the fact that the DOJ is currently coming after Alphabet and they are down 4%. DOJ is trying to push Google to divest from Chrome. Honestly, I think this is a terrible, terrible idea. Google does have their fingers in a lot of different pieces, and you could argue there is some kind of antitrust against them, but I don't really think it's merited, to be honest. One of their arguments is that they have too much control over Android with Google and Chrome all together, but then you have iPhone paired with the iOS software on their computers as well as their tablets as well as their iPhones, and you have no other choices but to use it on their iPhone, so that would arguably be a very similar scenario, but you have Google with Android, which is getting targeted right now. You also have companies like Microsoft starting to eat into their search revenue with Bing and their new AI platforms on top of that. And they did mention in the article there were some remedies that they could use to potentially mitigate some of the competitive risks, as they put it. But the other problem here is the idea of anti-competition is supposed to make it better for the consumer. And if you were to break up all of these platforms, it would make it tougher for the consumer to have an enjoyable experience on the internet with Google and Chrome, as well as Android. All of these platforms run very well and interconnect in ways that make life quite a bit easier, in my opinion. And the question, of course, is does all of this go away once Trump becomes president? I think that's a fairly likely case, but if they were to actually go through with this, Google would be hamstrung by quite a lot. Chrome and Android are huge to their platform, and really the only things that allow them to compete with the Apple Store as well. So Apple versus Android. It is a duopoly, and Google is the owner of that. But like I said, I do agree with the Google chief. This is an overboard proposal, and it would be terrible for both Google and the consumer, in my opinion. Moving over to fear and greed, big step up here to a 58. Greed on momentum, continuing to grind there on that price action. Regular fear starting to see a little bit of a roll up there, kind of a double bottom style forming. Breadth still trending lower, still kind of flat in this region here. Interesting to see that, but still extreme fear. And then put call ratio turning back down, back into regular greed. So it didn't go very high. I thought we'd kind of get into this 0.8 area as a more normalized top for this ratio. And then volatility tapering off. I still think that that's going to hit the 50 EMA there, which is just a few points higher. And then safe haven demand, junk bond demand not moving here today. Moving over to the economic calendar, continuing jobless claims are a little bit higher than expectations. Initial claims a little bit lower, previous number revised up. Really nothing significant there. Existing home sales, good beat there, so that's good for the markets. Fed balance sheet continuing to taper, pretty big jump there actually, a little bit over $40 billion rolling off. 10-year tips going up slightly, but still in that 2% range. And then for tomorrow, we do have that S&P data coming out, as well as the Michigan inflation data, so see how that plays out. Shouldn't have a huge impact. Moving over to Max Pain, 593.67, down a smidgen after hours. You can see Max Pain, 589 for tomorrow, so about $4 lower. Still tons of puts in the market, but they don't really start to hit until you get into that 574 area. And you can see here Max Pain red across the board for the next couple weeks. I do expect to see that down move. 0.78 makes sense to me over the next day. Then we'll see how that plays out into the Monday. Is it going to be another flat Monday? We've been seeing really choppy flat Mondays, and that fits with this thesis as well. So a little bit of a down move into tomorrow, then we'll see flat action into the Monday, Tuesday, and then we'll see if these bigger moves down start to play out. 2.3%, 4%, 5% lower here out to that 1 month time frame. Moving over to the charts, we did get another up move, about 0.5%. It is looking better, and you can see that step towards bullish momentum. RSI, again, both trending up together. A little bit odd there, but everything says this is a little bit bullish here on the daily chart, but let's take a look at it on the hourly, and you can see that same grinding price action here. Really looks like that bear flag setup, move down, bear flag, choppy action. From bottom to top, it's actually been a pretty decent run for a bear flag of about 1.8%. You can see this is starting to sell again here after hours. My guess is this is going to pull back to that 589.70 area. Then we'll see if it ends up holding support in there. You could argue it's starting to break through these levels, and it did hold on a closing basis above the trend line here. So gap up, doji, filled the gaps, continued to rally. Probably should have recognized that with the gap up, it was going to fill the gap and then continue here. But either way, it does look okay. You can see the RSI on the hourly chart is breaking down a little bit. And like I said, it wouldn't shock me to see this pull back that 4% that we talked about on Max Pain. Moving over to the Tasty charts here, you can see we did hold a slightly higher low here on the Tasty charts, pushed up, took out the ATR trailing stops, ended up staying in bullish conditions, sitting right on top of that level here at 592.79. Current price 592.84. You can see it's falling after hours. Volume not super great. So at this point, it's taken out the stops. If we start to see this break down from here, that's going to be concerning. Current ATR trailing stop is bullish conditions, like I said, here at 581.83. I'm just not super convinced. Sure, it might hold, and if it starts to go, I'll jump back in on this. And really, I trade the NASDAQ if you follow my channel for any length of time. But I do watch the SPY. I like to see the SPY going in the same direction. I think it does really drive markets. And honestly, the SPY looks pretty good here today. Upper ATR band would be your target based on this. That's at 598.50. If this kind of consolidation breaks down, lowest ATR band there, 580.53. Moving over to the Qs here, you can see we did get a slight positive day here as well, 0.36 or $1.80 higher, ended up holding right in this kind of trend consolidation. Momentum stepping to bullish, same thesis here on the RSIs. Overall, the structure is still intact, but it is starting to narrow a little bit. We're kind of in this mid-range. Can't really get above this midpoint here. You can see this trend resistance continues to be interesting, marking these tops, tightening above that here. Tried to break out, break back down, retesting here. If this starts to reject off of that on that kind of medium term thesis, that's going to be very concerning, and it really has not gained any kind of momentum. The other thing I forgot to mention on the SPY charts is we did get this gap fill from the Thursday to the Friday. We have not seen that quite yet on the NASDAQ. The NASDAQ has not looked nearly as strong, and you can see that kind of short-term price action here on the hourly. Again, looks very, very much like a bear flag setup, move down, consolidation. If this starts to break down here, that's going to be concerning. And the other thing here today is you can see on the early price action, we hit this upper band, immediately pulled back very aggressive. First candle was 0.83, took off all of my positions. Wicked these lows, again, 498.44 continues to be your support. Probably should have been patient in here to see if we did get that rally up, which we did. And I could have made money there and I just didn't, which was a little bit unfortunate. But the other thing I want to mention here is you can see on this rally up, we did miss that upper band. This should have been your price target. We came up short, hit the 200. We are rejecting from that into the after hours. You can see every time we've come into that zone, we've rejected fairly strong. Closing prices not above the 200, closing prices again not above the 200 on the hourly. So this is your resistance at the 200, which is 506.26. We're also back below this trend line here. And if this is a true bear flag, the fact that we are not hitting this upper band again on this push here is starting to show you that this is probably going to break here. If it pushes through this level here and then to that 498.44 level, then you should at least be looking for a touch back down here at the 492 area. And just to give you that clean move, you're supposed to base it off of this style here. So you have the move into the bear flag, take it from the top, should push you somewhere into this zone here, pretty much in line with this trend line, somewhere in that 488.30 area, taking out the 492 level, potentially into that 486.84 area. So this is what I'm looking for, especially if this starts to break some of these levels and out of this kind of structure that we have in the short term. Moving over to the Tasty charts, you can see we also took out the ATR trailing stops here. Again, bullish conditions. Based on that, now you can see the ATR trailing stop is at 490.93. Again, I think that's probably where we're headed, especially if this structure breaks down. I'm really trying to see it another way, but this does look like a bear flag to me. If it rips, upper target would be 512.31. Certainly could go there, reject off of this, and then have like a lower high setup. That's a possibility. But the way this is grinding and not kind of getting a shooting action like this, what you would have wanted to see was a low, higher low, and then you get a push through that kind of consolidation, and it's not doing it. It's really stuck in this zone. It's making some very, very slightly higher highs. But either way, short-term price target to the upside would be that 512.31 level. To the downside would be your 491.34 level down here at the ATR trailing stops and that lowest band. Moving over to the Russell and the Dow, this is what I wanted to see off of the SPY and the NASDAQ charts. This was a huge move, 1.5%, big very convincing. Gap higher, rally, everything looked very, very good. Momentum stepping to bullish. Big volume. Look at this volume here on the Dow on that push as well, which was also over 1%, headed towards that 441, 43 level. Probably pushing back up to the trends here, 446. Momentum stepping. Everything looks good on both of these. Tech is just not leading markets higher. It seems like the broader market is what's going right now, and both of these look good. Want to see 335 break. Push to that 338 level, probably back up to these highs here at 241 here for the Russell. And like I said, for the Dow, these trend lines up here around that 446 area. Moving over to the Mag 7, kind of the same thesis as the rest of markets. Grinding price action, big bearish day, 0.95. Momentum breaking down, RSI breaking down. Volume ramping, this is probably led by Google. We'll take a look at it across the rest of them. But we're still in this kind of consolidation, holding the trend, touched these levels, ended up holding it on a closing basis. This is probably going to go here tomorrow in my opinion, but we'll see. For now, it's still holding. Big bear candle, didn't quite make it to this previous high either, so overall looks kind of bearish. Moving over to MicroStrategy, I just wanted to follow up on this from yesterday because it did exactly what I thought it would. So we ended up gapping up, hitting the trend line here. We got a condescending report from Citron, which ended up sinking the stock 16.6%. Pulled back, filled all the gaps, hit the 9 EMA, so it was very extended. We talked about it, huge volume. This will probably go a little bit lower, especially with that big volume on the selling candle. And we talked about this last time as well. Once it hit this trend line here, it ended up pulling back about 47%. So if you did see another pullback of around 47% for here, that would put you back into the 278, 280 area. Overthrow this trend a little bit. We'll see how it plays out, but just thought I'd highlight trend lines are important, ended up being a critical zone for a take profit. Moving over to Apple and Microsoft. Apple really didn't move, momentum still bullish, still in this kind of bear flag setup, still in the middle, still cannot get above 230, still can't really get below this consolidation zone around 227. And then looking at Microsoft, is it finally going to go here? We got a big bear candle, 0.63, gapped up, hit these levels, sold off. Technically closed below the level here. 413.36 is the level, closed at 412.87. Wicked the alert that I had there, ended up bouncing slightly from there. We'll see if it ends up selling, momentum accelerating, RSI accelerating. Something to watch for. Seems like this is getting ready to go. Just looking at it, looks like it's ready to go to the downside. Current target would be that 394.22 area. See how it plays out. Everything looks a little bit bearish here on Microsoft. Moving over to Tesla and NVIDIA. Tesla did not move very much, 0.7 on the day. You can see still in this same region here between this 336.67 and 355 level. Same consolidation zone, no changes. Momentum still fading, RSI still fading. Still think this is probably going to pull back a little bit. And then looking at NVIDIA, ended up positive on the day, 0.5%, still in the same consolidation range. Volume ramping on their earnings, did wick all the way down to that 140.76 level. Touched that, pulled back, did wick a new all-time high, which is now 152.89, but couldn't hold those levels, and we're back into the same consolidation we've been in. Obviously, the structure is still very much bullish, but it seems to be finding resistance at this key level. Moving over to Amazon and Alphabet, both of these selling pretty aggressively, 2.2% and then 4.5% here for Google, obviously for the reasons that we already mentioned. Amazon broke the level, 255 cents, closed below it, hit on the trend, probably going to push down to 194.50. Again, looks like a bear sell here. Momentum bearish, RSI bearish, volume ramping on those sells. 55 EMA is your next dynamic, all the way down at 191.50. And then looking at Google, fully round trip this move once again back into this consolidation range here. Hit these trends, hit the 200. Let's go ahead and extend that out just a little bit, just below there. I don't think we can really underestimate the threat of the DOJ to Google right now. If the DOJ separates Android from Chrome, from Google search, and all of those things become separate entities, the value of Google, in my opinion, will go down significantly. And I think that would be terrible for all involved. Pull down markets a lot. Obviously, Google is a large part in terms of a percentage of the overall markets. Could be catastrophic here. So I don't think it can be understated. I hope the DOJ makes the right decision. Maybe the next presidency can make an adjustment here. I just don't see how this makes sense, and I would stay clear of this very much here, at least for the short term. Moving over to staples and discretionaries. Staples finally getting that clean breakout, 1% higher. It's right at the level. This needs to continue here. I think it's going to push back up to these highs, realistically up in that 84.50 area. This is a bull flag again, in my opinion. Seems like there's a lot of flags across markets right now, but big push up, consolidation, held this higher low like we thought, clean breakout here. This is going to go probably 5% or so up to that next level, 4%, 4.10% from here. Again, it's not a big mover, but looks like a pretty clean setup. And then looking at discretionaries, continuing to grind lower, still positive on the day, still right at the level, but overall doesn't look great. Momentum bearish, RSI bearish, trends still positive, but looking for a pullback to that 21 EMA, sitting around that 208.67 level, just below my 210.41 level. Moving over to oil and gas and transports, both of these going higher on the day. Transports finding support, oil and gas continuing to rocket ship here towards this trend line around that 150 area. Momentum bullish, RSI bullish. Like I said, the broader market seems to be finding some strength while tech is underperforming. And that continues here with these kind of consumer staples style stocks that do well in most conditions, continuing to do well here. Moving over to RIOT and MARA, you can see RIOT was down 3%. MARA did exactly what we thought, pushing to this previous high at $25, ended up 6%. At the highs, it was around 14-15% like we thought that it would be. Momentum bullish. Volume kind of a sell there after touching those levels, but see how it plays out. Right now, if it can get above these high consolidation ranges, 32.95 would be your next target in my opinion. So see how it plays out. I would look for a little bit more push in my opinion. Moving over to Breadth. Breadth had a huge thrust here. Pretty good move. 22 and 11.2% respectively. Interesting move. 20-day is back to this previous high just below the 68 level. Momentum stepping to bullish. RSI stepping to bullish. Volume looks okay there. Momentum on the 50 also good. RSI looks okay. It's not quite at that same level. It does look a bit like a lower high off of this level here. We said Breadth looked good yesterday and it did have a little bit of a continuation here today. Interesting to see that with how markets are looking, but you have to respect what you have, which is a low, higher low setup on Breadth. Maybe Breadth has a little bit of a thrust here, and that does give overall markets a little bit of strength. Makes sense that we're seeing the Russell and the Dow outperform, but like I said, the Nasdaq is still not doing so good. And then moving over here to the dollar once again finding some pretty big strength, closing above the level, looking to push to this trend here around 107.48. Momentum back to bullish, RSI back to bullish. Again, the dollar going higher with equities going higher is weird. We've been seeing it for a little bit now. If this starts to jolt, if this starts to accelerate, I just can't imagine that equities are going to continue to hold these kind of gains. But so far it's been holding up. Probably going to hit this trend here. We'll see how it plays out. Seems like the dollar is regaining a little bit of strength here today. Moving over to bonds. Bonds held up again. J&K basically unchanged. TLT still in this grinding action. I still think this is going to go. Seems like a good setup back up to $100 in my opinion. Still have that low, higher low setting up. Still this same consolidation, volume building in this zone. You can see the volume spikes in this trading area, so no change to the thesis, still looks good. Moving over to volatility. Volatility was negative, but it did throw spikes in both directions, still holding up, slightly elevated momentum, step to bullish, very slightly. RSI still looking bullish. We'll see how this goes. I still think it's going to spike, especially off of that bear flag type setup, but at this point, slightly lower high, inside candle, could go either way. Moving over to my accounts, as you can see, I did get that money back from the after hours yesterday, so I made that money back, ended up slightly positive on the day and from 2 days ago, so overall not bad, made a little bit of money on the day, definitely not as much as I should have. If I had held my positions, I would have been in a better position. Honestly, would have made quite a bit more, and it's a little bit upsetting, but overall, still concerned. You can see I didn't put that Q's position back on. IWM, left that alone, still looks very good, rolled out here to 5 days from now at 231 for $4.69 credit, so I'll probably roll this up and out a little bit more depending on how price action looks. Being patient here on the IWM, but overall for the Qs and the SPY, I think it's a little bit too dangerous for now, especially if we start to see that bear flag break down. Let me know down in the comments section what you thought of the Google move. Are they going to get broken up? Are we going to see a bunch of Google subsidiaries or separate companies? And what do you think of the charts? Are we actually going to get that resumption higher, or will we get the bear flag breakdown? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.